Steve Leisman has the details for those minutes. Steve, what you got?
Courtney, the minutes from the Fed's most recent meeting show that the most of the participants in the meeting still saw significant upside risk to inflation that could require further tightening. So at least in that one statement there, a pretty hawkish outlook there from the Federal Reserve. But hold on before you make your immediate trades, because these minutes are a mishmash of different points of view. Some of the top line comments, some saw downside risk to the economy and upside risk to unemployment. So that kind of sort of works against that, but it's a smaller number than the most who were concerned about the upside risk. A number said risks were two-sided, and we learned for the first time in these minutes that a couple participants, apparently not voters, just people who were at the table there among the bank presidents, wanted to keep the rates unchanged. So they were not in favor of, they were not voters apparently, or if they were, they didn't vote. They didn't vote what they said their concern was, and wanted to keep rates unchanged. Now, I'm going to give you some positive comments, and I'm going to offset those with negative or hawkish comments. On the positive, dovish side, some saw tentative signs inflation could be abating, including softening core goods prices. There were continuing signs of supply and demand in labor coming into better balance. Tighter financial conditions were expected to slow consumption, and a gradual slowing appeared to be in progress in the economy. That was back when they met in July. However, that has not been the case. So here are some of the negative hawkish comments that were there. They said real GDP had demonstrated resilience. That's been the case over the intermediate period here, and the economy showing considerable momentum. Again, that's been the case. This group saw payroll and wage growth as still high, and several said significant disinflation had to become apparent in core services ex-housing for the Fed to relax on the idea of raising rates in the future. There was a high degree of uncertainty over the effects of past hikes. And one other thing I want to leave you with is this notion here that says that below-trend growth is needed to bring supply in line with demand. We have not, Tyler, as you know from our discussion just an hour ago, had at least forecasts here for below-trend growth. So that group in the Fed not getting what they want in terms of below-trend growth.
All right, Steve, thank you very much.